morning. Welcome to the XM.com weekly market update, and we're joined again by Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
We'll get into these numbers. Last week, the RBA kept interest rates on hold, a little bit unexpected, but I guess they're waiting to see the lag effect, if you like.
Of course.
We also had the retail sales numbers out, which up again only slightly, but I think in the current environment, any positive number in relation to retail sales is a good thing.
Yep, absolutely, Andrew. There's not much to add than that it's positive.
Yep.
And it's come off a flat, when you're looking at the chart there, that tells a story. And let's see what the Reserve Bank does in July. Let's see what the Fed does this month. In August, I should say.
Yep.
And yes, we've got should be an interesting month, July.
And in New Zealand, we've once again, they've probably been one of the most aggressive central banks over the last 12 months. They've had consecutive interest rate rises.
Certainly have.
But if you look at that, the New Zealand dollar not doing a great deal. The business confidence, though, that yellow line, that is now negative 18, which is ironically is a good number compared to where it was.
Yes, exactly. I mean, it's when you're thinking about where it was in the COVID numbers and minus 63, 65. So it's bounced a fair bit, and let's just hope that it sees some sunshine.
Yeah,
it's heading in the right direction.
Yeah. And with in New Zealand, like as I said, the central bank there was probably one of the most aggressive and early movers in this interest rate cycle.
Yes, very much so.
Currently sitting around 5.5%. The expectation is to go to 5.75. Yet the inflation is still above 6%.
Very sticky. Yeah, very sticky.
So makes for a tough market over there at the moment. So
yes, exactly.
China, CPI came in at 0, which is astonishing, really, considering we've seen how crazy the inflation numbers have been in a lot of the other major economies.
100%.
China comes out of the COVID lockdown and is languishing.
Yes, I mean, we've discussed that on many months. We thought they'd come out of the blocks quickly after Lunar New Year into March and then to April, and then all of a sudden it's fallen into a big hole. So again, we've just got to see where they move over the next matter of months. The property sector, they're going to stimulate that further, and you could see some blue sky come September, October. We'll just have to wait and see how it all materialises.
Yeah, it's interesting numbers there for sure. The the ISM numbers came out last week.
Yep.
Unexpectedly, a little bit higher than what they were anticipating, which sort of goes to the story that the economy is still chugging along quite nicely.
Yes, it certainly is, and it's big markets as far as the equity markets. The move to the upside over the first half of 23, as we've discussed. And you can't argue with those sort of numbers. They're not that strong, but they're better than being 47.
Yep, for sure. We also had the non-farm payrolls came in slightly lower than the market, which is the first time it sort of underperformed, if you like, for the last few months. But still, it's the resilience of the labour market there in a lot of countries has been extraordinary.
It has been. There's no doubting that. And as we keep on saying, if you want a job, certainly in the US, you'll get a job. So a similar situation here in Australia and much of Asia.
Yeah, for sure. Now, CPI number comes out this week in the US. The last month was
I think it's Wednesday or Thursday.
Yeah. Last month it was 4%. The forecast is 3.2. Like it dropped from 5 to 4. So if it gets to 3.2, you're pretty close to the target range.
Well, you are, and then we've just got to see whether we see that lift off as far as the Fed on the 26th of July for another 25 basis points.
Well, there's plenty of talk that they are going to do it, and some Fed members have come out sort of this week as well, have already said, we still need higher rates, etc. So I think the market is probably expecting that, but you would sort of think it's got to be close to the peak of interest rates, assuming inflation stays under control.
Yeah, and energy prices still at this, these sort of band at the early 70s to, 74, 78.
And they could probably absorb some higher energy prices now, considering a lot of other prices have come off and inflation has come off quite a bit. If there was a bit of a jump in the energy price, I don't think it'd be as much of a distraction compared to 3 or 4 months ago.
No, true. We'll have to see. Hope that doesn't materialise, but it certainly could.
Yeah, so... and finally, just talking interest rates, it's interesting looking at these charts where we sort of say what the market was expecting in May, which is the green figure there, which is considerably lower compared to what it is today.
Absolutely.
So I think with those numbers, we'll see what the Fed does. Yeah, 25 basis points. I don't think if they do it, it's not going to have a huge impact.
No.
It might probably lift them. It might lift the US dollar a little bit, give it a bit of support.
Back under 102. We've seen a big move as far as currencies over the last couple of days. Pound, where yen sitting at 141, back from that 145 number, and you've got the euro now at 1.10. So yeah, there's been a fair bit of movement, and it's been dynamic for traders.
Yeah,
fantastic time.
Yeah, for sure. So we'll keep an eye on those numbers. Obviously, the CPI is the big one.
Yes.
Which comes out later this week. That will determine where the market goes. And interestingly, it's the start of earnings season at the end of this week as well. All the big US banks kick off earnings season. So I'm not sure how many quarters we've said it now where the earnings could struggle. And they've sort of hung in there.
They have hung in
quarter.
there. So yeah, we've just got to see, and we know that the S&P is running at around about 19 times multiple forward earnings. So that's historically high. We'll just have to wait and see, the earnings and what that transcends to price.
Yeah, for sure. It'll be a good test this time around.
Sure will.
So anyway, we'll keep an eye on that, and we can regroup again next week.
Yeah, been a cold couple of mornings in Sydney.
Certainly has.
And to all of our viewers out there, we send you from Sydney in a winter's time.
It is a bit of wind chill factor.
Yes, absolutely.
Good stuff. All right, Pete. Thanks again.
Good to see you, Andrew.
Okay. And that's the XM.com weekly market update.